Mic check, 1 2 1 2. The market is hot and so are you. All right, 12 o'clock. I'm going to get started in about 30 seconds or so. This week's market update. All right, let's do it. So welcome back, everybody, for this week's update on all things market, all things life. It is October 3rd, 12 o'clock Eastern Time. Sorry, November 3rd. Wow, losing it. Election day. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. I've got about 16 positions on right now, longs and shorts. I have, over the course of the last couple of weeks, pared out of some of my short positions. So I don't have SDGR anymore, I don't have GRWG anymore, I don't have Beyond Meat anymore, a couple others in there. Added a little Tesla short, trying to get myself a little bit more market neutral into the election. I am planning on being net long into the election, and the potential result from tonight, which is something I will speak about a little bit in today's webinar. How do I get rid of this? Anyway, about me. My name is Derrick Oldensmith. I am senior trader and registered principal at T3 Trading Group. I've been with T3 really since 2010, first with T3 Capital, then T3 Trading Group, a little bit of a name change and regulatory change there in 2011. So I've been with the firm for over a decade now. I've mentored well over 100 professional traders. I'm currently managing a group that is in excess of 50. In my spare time, big martial artist. I used to fight professionally. I was a two-time world champion kickboxer. Big skier, big hiker, big traveler. there's a lot out there. For people who've been following along with my weekly webinar, you know that I have had the privilege of traveling throughout the entire United States basically this entire year, and it's been a difficult year in a lot of ways, with coronavirus and everything that's been going on. But what I like to say when it comes to markets and what I like to say when it comes to life is that you cannot choose the cards that you're dealt. You can just choose how you handle them. So, coronavirus hit, T3 shut its office down. I typically am running the trading floor at our Manhattan headquarter office, downtown Manhattan, and I've lived myself in Manhattan since 2004. Coronavirus hit, we shut the office down very quickly. I went to upstate New York for about 4 months, beautiful up there in the mountains. From there, spent a month on Long Island, a couple of weeks back in the city. Then my wife and I traveled out to Buffalo, Wyoming, middle of nowhere, incredible experience. We were there for about 3 months, spent some time traveling through Yellowstone and Teton, spent a month in Montana, spent the last 2 months in Victor, Idaho, had some incredible experiences there. And now just this last weekend, I moved again. I'm now in South Lake Tahoe, in the California side, on the California-Nevada border. So drove about 15, 16 hours this past weekend over a couple of days. Spent one night in Salt Lake City. I took this road through Nevada, Highway 50. It's called the loneliest road in America. And let me tell you what an experience that was. It was really beautiful, really incredible. I had never traveled across the middle of Nevada like that. In my brain, I kind of just always assumed that it would just be a big desert or something like that. It really wasn't that way at all. I mean, I guess it's, desert conditions, but it's mountainous, it's beautiful. At one point in the drive, it's basically just a straight road, very few cars, not really too much of a speed limit. I'm doing 95 miles an hour, and a wild horse just runs right in front of the car, right into the middle of the highway, just kind of trotting along, slammed on the brake, was really close. Thank God I did not hit this horse, but it was a wild horse in the middle of Nevada. And then I saw he had a whole bunch of friends as well. Just incredible. Growing up in New York and living in Manhattan for such a long time, you almost wouldn't even think that a wild horse could be a thing. But they are, apparently. I've seen them firsthand now. And again, just an incredible experience, and kind of lucky to have not hit that horse, because I probably would not be here speaking to you guys today had I hit that wild horse at 95 miles an hour. Anyway, that's not what we're here for. We're here to talk about trading, markets, T3, a lot of good stuff. If anybody has any questions about any of the things I talk about today, or they want to find out more information about getting involved with T3 Trading Group, either as a professional proprietary trader or having a retail account with us, or if you have any interest in T3 Live services, you can reach out to me and I'll either speak with you myself or I'll put you in touch with the right person. Here's my email address. And with that said, let's take a look at some charts. Actually, I'm going to use this other chart right here. Okay, so it's an incredible day, and the difference between what I say in today's webinar versus what I might say if the webinar was tomorrow, it could be completely different. We have a tremendously important event that is occurring today, tonight. Hopefully we have a resolution to that event relatively quickly, and this does not become a long drawn out process, but I think everybody knows what it is. Today is election day, and we are going to find out who the president of the United States is, hopefully soon. This is really important, and I just want to talk about it for a second as far as how politics work with markets. Everyone has their own political opinion. I have my own political opinions. I try very hard, and it is very hard, to not intermingle my personal political beliefs with how I understand and how I view the marketplace. Because that is a mistake that I have seen many people make over the course of years. I remember just this last election when Donald Trump won, hearing about the people who instantly liquidated their entire portfolio because of their political view. And again, I am not in my morning meeting or my afternoon meetings with my professional team or in a webinar going to, get in front of everybody and talk about how I feel about President Trump or, Vice President Biden or different things of that nature. That's not what I'm here to do. What I'm here to do is analyze how certain events affect markets. And we can say unobjectively, but just using the last election as an example, if your political beliefs caused you to sell out your entire portfolio as soon as Donald Trump won, well, I think that the statistic is that the market is up, the S&P is up 52% over the course of the time in which he has been the president. And again, just to repeat myself, I'm not going to get in front of everybody and grandstand and say I think he did a good job or a bad job or he's terrible or he's great. That's not what I'm here to do. What I'm here to do is talk about markets. And we have several big picture macro events that are ongoing right now. The election being the big one. It is election day today. Coronavirus being the big one. I really think that the recent market weakness is actually more about the coronavirus resurgence than it is about fears of the election. But we have to spend a couple minutes talking about these different scenarios that can occur based on the election and how they can potentially affect markets. And the thing that I told my team this morning in this morning's meeting was that, coming into today, by the way, today's been an incredible day, right? Let's take a quick look here at the market. S&P is up 2%. NASDAQ is up 2%. Russell 2000 is up 2.25%. So we've had a tremendously strong day thus far. Any oversold conditions that we had last week are now completely gone. Market has snapped back all the way into this equilibrium area. We spoke about 338 being potential resistance for the SPYs this morning if it gets up there. Just to get into the technicals real quick, and then we can talk about what might potentially happen for tomorrow. As far as the technicals go, we were very oversold last week. Market sold off really hard. Germany's shutting down, France is shutting down, Belgium is shutting down, the UK might shut down. We're seeing huge spikes of coronavirus in the United States. And again, not to get political about is the virus the flu, is it deadly, or anything like that. We know objectively the market does not like shutdowns because they're bad for the economy. And we could get into different moral arguments, things of that nature. I'm not doing that today. I keep things very specifically focused on the marketplace itself. So based on that, and based on certain fears about the upcoming election, the market went into a feedback cycle of selling, where a couple weeks ago we had been speaking about the importance of 340 in the SPYs. 340 broke, and it led to a fast move. A few days later, we find ourselves all the way down at about 322 in the SPYs, extended to the downside. This is just Friday of last week, and now today we came all the way back up to 338. Coming into today, this is a very tricky trading session. This is a 15-minute chart that goes back a little bit over a week now that we're looking at. Today's a very tricky trading session because we know we have this big binary event that is going to occur, throughout tonight and into tomorrow. And from a technical perspective, we're gapping up very large today back into the bottom portion of what I call equilibrium on the big picture, which is the space between the 8 and 21 EMA. And we have what I call competing gaps this morning. And competing gaps can be tricky. On the one hand, I have this morning's gap up, right? This is where we closed yesterday. This is where we opened today. So I have this large gap up this morning. It was about 1%. But what does that gap do? That gap puts us into this gap from between the 27th and 28th of October, like 5 trading sessions ago. So on the one hand, you could see the market trading higher here and filling this gap. On the other hand, you could see the market trading lower here and filling this gap. So it's an interesting supply and demand dynamic. Gap analysis is a huge part of my own trading. I always find that I am best as a trader in the beginning of the day because I understand gap analysis. What gap analysis is really about, we have all these different types of names for gaps, things like that. I say this all the time, technical analysis is not just about memorizing what things look like. It's about understanding supply and demand and incentives. Supply and demand and incentives. You need to understand when you're looking at a gap, what does this gap do to the participants who are already in the marketplace? Does it put people into the money? Does it put them out of the money? And then based on that, what are they incentivized to do? Are they incentivized to short more? Are they incentivized to buy stock? Are shorts getting squeezed? That's what you're trying to figure out. Another thing that we took notice of is that we have a little bit of an inverse head and shoulders here on the 15-minute chart. You could argue that this is a shoulder here, here's your head here, and here's your second shoulder, and we're breaking up above the neckline. I would say that the neckline is kind of an area between 332.30 and 333.30. So we're breaking up above that with today's gap. So that is potentially bullish as well. So what we spoke about with my team for this morning coming into today was actually having a bit of a less is more approach. Again, we have this big binary event tonight. There's no way that anyone can know with certainty how this is going to work out. I'm going to talk about the different scenarios in a minute. But we do know our levels and we do know our technicals. So the fact that we are gapping up above all of this price action into another gap means it could be very easy for us to fill the rest of this gap. So what we spoke about in the morning meeting was SPY 338 as the area to pay attention to. And guess what? When SPY got up to 338 earlier today, I'm in my VTF, I'm talking to my team, and we're all saying, hey, this is the area where we should be booking some profits on our longs and potentially adding onto some shorts. And I'm very appreciative that this market was able to give me this strong day today, because it's given me an opportunity to get a little bit more market neutral. I'm still net long, but into this move up today, I booked some profit a little bit in some of my longs. I added to a little bit of my shorts. I'm still net long, but it got me a little bit closer to neutral, and I feel a lot more comfortable being a little bit more neutral than the degree of net long I was just a couple trading sessions ago with the impending election. So that is, again, technicals and strategy. What I do with my team every day as part of our morning meeting is we take care of big picture strategy, because in my opinion, it's almost impossible to trade any individual stock if you do not have an understanding of what the big picture is telling you, because the correlation between individual equities and the market as a whole is very high. If you trade Apple, Microsoft, any big tech names, any banks, any stocks really, unless it specifically had news that day, and you are not also paying attention to the market at the same time, you are doing yourself a disservice. So now we have this event coming up tonight. You know, we're going to know who our president is, I hope, at some point. And there are really 3 different possibilities that have been outlined, right? So one possibility, very simply, Donald Trump, who is currently the president of the United States, is still the president of the United States. He wins the election, he wins re-election. Second possibility, Joe Biden becomes the new president of the United States. He becomes president. But there's a third possibility here that really was not a possibility in the same way in other elections. And this third possibility has been getting a lot of media attention. The media attention has been talking about the possibility that we may not know who the winner is, that we may have a contested election. We may have a scenario where neither Donald Trump or Joe Biden concedes to the other person. And what we do know is that markets hate uncertainty. Markets hate uncertainty more than anything else. And it's probably part of, again, I really think that the sell-off that we saw last week was more based on coronavirus than the upcoming election. But I bet that the sell-off from last week was compounded by fears of the election. So we have these 3 different scenarios. Now, the next thing that we need to assess with any of these scenarios is probability, right? And probability is going to dictate how you want to be positioned, right? That's what trading comes down to. Trading is risk, reward, and probability of success. Very simply put, if I can risk one to make one and be right 60% of the time, I'm going to be very wealthy in the long run. With that said, most of the best traders I have ever met are actually wrong more often than they're right, but it's their risk reward that makes up for it. And if you've been following along with my webinars, this is what I talk about all the time. Is about putting yourself in these win-win scenarios. That's what I'm constantly trying to do as a professional trader. I have this position on, the position is working out for me. I'm implementing trailing strategies. I am limiting my risk. I'm leaving my reward side as unlimited as possible. And by doing that, by building in good risk, reward, and probability of success scenarios, you can be consistently profitable over the long run, trying to put yourself in these win-win scenarios. So again, not to get political, but to have an understanding of probabilities of this election scenario when we have these three different potential options. President Trump wins, Joe Biden wins, or we don't know. Well, this is where we can turn to things like polls, right? And this is where we can turn, what I prefer to look at even more than polls is actually betting. Right? Because, we saw just in this last election that the polls were able to be, very incorrect back in 2016. But I feel like the gambling market actually probably does a better job handicapping the true odds. So I pay attention to both. And what we know coming into this election, just in terms of probability, is that Joe Biden has a higher probability of winning. That's the highest probable scenario going into this election. Could Donald Trump win? Yeah, it's very close. And again, we just saw in 2016 this exact same thing happen where he was massively behind in the polls as the big underdog and kind of came out the victor. And then we have this third scenario where it's too close to call. And, I personally, as an example, did an absentee ballot. I have been, I'm a big believer that as an American citizen, you should get out there and vote. That's your right as an American citizen. And there's a lot of mail-in ballots, there's a lot of absentee ballots. Those potentially need to be counted if it's very close. So we have this third scenario where, maybe the president says that, we need to see the numbers come in, or that the election was rigged or something like that. And, Joe Biden is saying, we need to count all of the mail-in votes. There needs to be a recount. Maybe some of those mail-in votes are coming in slowly, might take days to be processed. So we have this third potential scenario where in an absolute worst case, there is a chance, I would call it a small probability, that we do not know who the President of the United States is even in January, in February. That we could go a couple months not knowing who the President of the United States is or is going to be. And that is the worst case scenario for markets. That degree of uncertainty. Like, if you're worried about the potential of getting stimulus done, which should be something that you are worried about, well, you know what? Sorry about that. The stimulus is not going to get done if we don't even know who the President of the United States is, right? And that's obviously something that is also going to have a large effect on markets. So these are all the things that we have to pay attention to. But my personal thought process is that provided that we know who the president is, it's going to be bullish for the market because it puts this degree of uncertainty behind us. And that without a doubt, if we don't know who the president is, it's going to hurt the marketplace. But I think that the market is overpricing in that scenario, right? And that's what we need to be assessing as professional traders. If the market is overpricing in that scenario, well, what do we know? Well, we know at this point in time that people who just want to be in cash and be on the sidelines because they're worried about all of this, which makes plenty of sense, they probably already sold those positions. We know that institutional money is heavily hedged because of that scenario. So really, if either president is clearly the winner, well, those hedges need to unwind. That's going to be buying, That's bullish, right? And we can talk about, from a policy perspective, right? We know that Donald Trump, for better or for worse, has been a pro-market president, right? You could make arguments about whether his tax cuts are a good thing or a bad thing for the United States of America, but without a doubt, here are a good thing for the companies that make up the S&P 500. Bullish. Well, you can also make the argument, and obviously, so again, talking about statistics. I looked at some statistics through my VTF and through Patrick in the VTF, who put some great information in there each day, that one of the big fears of a Joe Biden victory is an increase in capital gains tax. Well, but what effect does that actually have on the market? Well, the understanding, based on the statistics that Goldman published, is that it typically has about a 5% correction effect on the market, but it's shorter term. They try to take advantage of, the old tax rate as fast as they can, and then once the new tax rate is established, well, then they end up plowing their money right back into markets. So it seems to be more of a shorter term negative effect. And Joe Biden is probably a less market friendly president than Donald Trump is, but we can feel confident that it's going to get an even larger stimulus done. And studies have also shown that it's more likely that Joe Biden is going to be worse for the US dollar, weaken the US dollar. Well, a weakening US dollar is also bullish for the market. So you've got these factors on both sides, where my personal thought process is, regardless of who the president is, as long as we have one, it's going to be bullish for the markets. And that the bear scenario is that we don't know who the president is, but I think that that's a much lower probability, personally, than what the market has been thinking about. So, again, like I said, doing the webinar today is interesting. I'm sure that this might be a completely different conversation if we were doing the webinar tomorrow and we kind of see where things fall. And it's very difficult to assess the technicals of the market. The way that I view markets is based on a combination of fundamental analysis, understanding money flow, particularly institutional money flow, and technicals, understanding the supply and demand incentives of the marketplace. And we can analyze the technicals to death here. Honestly, at this point, with the market being in between the 8 and 21 EMA, getting back to about 338, I would call the technicals, bigger picture, neutral to bearish. But you can almost throw the technicals out the window a little bit right now, because we have this binary event that's going to occur. There's no way that anyone can know what the result is going to be, and you want to be positioned appropriately going into it. You do not want to be putting yourself in the position where, if that worst case scenario were to happen, that you're finding yourself, bankrupt and homeless because you were maximum leveraged to the long side and the market got destroyed because we don't know who the president of the United States is, at that worst case scenario. But I personally am planning on going into the election net long. Not massively, and again, I've used the fact that the market is up really big today as an opportunity to book some profit longs and add some shorts. So if that worst case scenario happens, even though I am net long, I will lose money, but it should not be, massively damaging to me. But I think that the higher probability is that we know who the president is in a relatively appropriate period of time, and that's going to be bullish for the market, and that's what I'm positioned for. And again, that's just based on an understanding of probability in the marketplace. And we'll see how all that plays out. As far as technicals for the market, there's not really too much to talk about. As far as individual positioning, I've been very hesitant to add on to new longs in general over the course of the last 2 weeks. Well, one, because the market technically broke down, and two, because I was already net long and did not feel like I wanted to add any additional long exposure into this marketplace. So I really haven't done too much except for pair out of some long positions over the course of the last couple of weeks and add to some shorts. As far as news and individual trades, if people are paying attention to what happened with this Ant Financial IPO, that's an incredible news to me, and my mind was blown this morning. Ant Financial is set to be the largest IPO in history, larger than Saudi Aramco, and all of a sudden, right before this IPO is about to happen, They pull back from that, right? Because of the regulators in China basically saying that they can't do it, and I'm not even sure what the full news story is there. It sounds like it might have something to do with comments that Jack Ma had made. So we'll see how that plays out. I've been very bullish on China and Chinese equities. I have a small position in Alibaba. I have a position in JD. I have a position in NEO. Incredibly bullish on NEO. My switch is totally flipped on NEO. I had been really bearish on this company for a long time. Made money, good money to the short side on several occasions, particularly into this spike. And then just my understanding of this company has changed. So again, the way that I like to trade is a combination of qualitative fundamentals and technicals. Well, you got bullish wedge that broke out, followed by a bullish wedge that broke out, followed by a bullish wedge that broke out, and now we're just seeing massive momentum continuation. This company has, which it did not have in the past, really gotten the Chinese government behind it. If you know anything about how doing business in China works, well, you need to have the government on your side in order to be successful. And they are, really pushing NEO. And I have friends in China. One of them reached out to me. Actually, I reached out to him. Hey, are you, and again, I like to do this kind of ground up research. I tell my traders all the time, the world around you provides you a tremendous amount of information about markets, and obviously it's all anecdotal. But pay attention to the world around you. It shows you trends as they are occurring. And I'm reaching out to my friends in China, and they're saying, yeah, NEO's blowing up out here. A good friend of mine actually just bought a NEO for himself. He's really excited about it. He says it's just like a Tesla, just as good quality, but at a cheaper price. And it sounds like the government's really pushing it. Europe is now, they're potentially trying to expand into Europe. So all that's been really bullish. Would I come in here at $35 after it was just a 6 trading sessions ago and start buying? No, I wouldn't. But we can look for continued bullish technical setups in NEO as they occur. And then you see Alibaba getting a little bit of a hit today. JD taking a little bit, oh wow, actually this JD came all the way back. Took a little bit of a hit this morning, again, just based on this, the Ant Financial news. So I thought that was pretty incredible. But as far as technical setups for everyone today, I don't really have much to bring to the table just because we got to get this election behind us and see how that plays out. So that's really it. What I try to do each week on this webinar is provide lessons. And, the lesson, I guess, from today is to have an understanding of how markets really work. What moves markets most is surprises. So what you need to be understanding is, what is the expectation? I've been saying for the last week or so that it's a very low probability that our U.S. government gets stimulus done because the U.S. government's been a disaster and Democrats and Republicans can't agree on anything. It's a low probability that stimulus gets done. People are not expecting it to get done anymore. That's one of the biggest upside risks to the market. Why? Because people are not expecting it. If everyone was expecting the next round of stimulus to come and then it happened, it would not have as big of an effect on the market. So that's what you want to be assessing when you're looking at any type of event, is the probability of the event occurring and how well you believe it's priced into the market. That will give you then an understanding of the reaction. And then sometimes an event is so expected that when it actually comes, it's what they call sell the news event, right? We see that very regularly when Apple, does its new iPhone. Apple releases the new iPhone, it does what everyone was expecting, it's probably going to be great, but it had such a big run up into that event that they end up, selling the entire thing. So that is today's lesson. We'll see, it's going to be an interesting, I have no idea what I'm going to be telling everybody next Tuesday on next week's webinar, because I don't know what's going to happen tonight. It's exciting. So everybody get some popcorn, grab some beers, get on the TV. I hope everybody voted, and we'll see what happens as far as the fireworks tonight. And I hope that it all works out well. So let's go back to, here we go. All right, so now that we spoke a little bit about charts and the upcoming events, let's talk a little bit about trading at T3. So T3 Trading Group has professional proprietary trading. That's primarily what I'm going to be speaking about today. We also have retail trading, personal accounts, similar to what you might have at I don't know, an E-Trade or a Robinhood or TD or Interactive Brokers. We have both of those. Just to talk really quick about retail, because I'm usually primarily speaking about prop and professional trading. Our edge in the retail space is direct market access at a low commission cost on professional trading software with free professional education if you have a retail account with us, and an excellent borrow list, if I didn't say that already. You have direct market access. So, the majority of the brokers that are out there, they call themselves free commission trading. Well, that's true. They are free commission trading, but they're not free. And that's what, people need to understand. It's not free because your orders are being sold out to HFT firms. And those HFT firms can legally front run your orders. It used to be when you opened up a retail account with any of those brokerages that they promised you best execution price. You will most likely find that that language is no longer in the paperwork. You don't get best execution price because, look, businesses don't operate for free, right? They're doing it to create a profit. And if they can't, or they're not making profit through commission anymore, they're making a profit by selling your orders out to high frequency trading firms who then cause you to get, potentially worser pricing on your trading. And if you are getting a worser price on your execution, that is extremely expensive. If I just bring over, this is my SPY level 2 for the SPY, the ETF that represents the S&P 500. So this is the true depth of market for the market, and this is the tape. This is all the orders that are occurring in the marketplace. So I can see right now that the inside offer is 337.19 in the SPY. I can take that offer if and as I want to. And I don't have to worry about an HFT taking that price and selling it back to me at a higher price because my order got sold out to an HFT firm. And that can be extremely expensive. If you're getting a worse price by a penny or 2 pennies, that turns into an internal cost in your trading that can be, $10 to $20 per 1,000 shares that you trade. So our retail accounts here at T3 do charge a small commission cost, but you have direct market access on a professional trading platform, which is Sterling Trader Pro. So if anybody has interest in a retail account with T3, all of our retail accounts have to meet the pattern day trading rule. So the minimum to open up a retail account with us is $30,000. If anybody has an interest in that, reach out to me. I can provide you more information. With that said, let's talk about T3's bread and butter, which is professional trading accounts at the firm. T3 has over 500 licensed professional accounts. We are one of the biggest proprietary trading firms and one of the most well-capitalized proprietary trading firms, if not the most, in the country. We have different physical trading offices. Our headquarter office is in New York City and Manhattan. Again, that's typically where I'm located, but you don't need to be in an office. As a matter of fact, you don't need to be in an office at all anymore. The virtual trading floor system that we have, the communication that's been in there has been so excellent this year that everyone's been able to be just fine on a remote basis. We have all of our traditional training and development set up as a remote basis that used to be done in the office, so you don't have to worry about any of that. Probably 60 to 70% of our traders were remote even before our offices shut down. Now our offices are shut down. Well, guess what? You can work from wherever you want in the United States. That's what I've been doing. It's been an incredible experience, seeing all these different cultures, seeing all these different places, beautiful mountains, beautiful deserts that we have here in the United States. You could trade from any mountain or any desert you want as long as you can get internet there. In order to join T3 as a professional trader, you have to keep in mind that we are an SEC broker-dealer and member of FINRA SIPC. That means that all of our professional traders have to become professionally licensed. There are 2 examinations that you have to pass in order to become a professional. The first is the SIE exam, Security Industry Essentials. The second is the Series 57, which is the Professional Proprietary Traders Examination. And before you can even do that, you would have to pass a background check. You cannot become a professional trader if you are a convicted felon or if you declared bankruptcy in the last couple of years. T3 will provide you with all of the study materials that you need for the licensing exams. We sign all of our incoming traders up for an STC study program. You're going to get textbook, online classes, online practice tests, everything that you need to pass the test. And then only after you've passed both examinations and you're fully licensed can we actually get started with professional training or trading in any way here at the firm. We have 3 different trading software options available for our professional traders: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. On the retail side I mentioned, we only have one. It's Sterling Trader Pro. These are all excellent professional platforms. I personally use Lightspeed. I've been using it for over a decade. I love the software. I would recommend it to anybody. Sterling Trader Pro is great as well. WEX I personally don't have as much experience with, but my understanding is it's also great software. So reach out to me and we can discuss which one is best for you. As far as asset classes go, I am specifically equity focused, but we also have equity options, we have futures, we have options on futures. So if you're interested in any of those, reach out to me. I can speak to you about it myself, or put you in touch with the right person. So what should traders know? So again, T3 is been in the professional trading business for a long time now. We have a very diverse group of traders here at the company. Some of them are brand new entry level. Some of them have been experienced professionals that have been involved in the business for decades. My personal group is this way. I've got former pit traders, former floor traders, former fund managers, all as a part of my team, guys with decades of experience. And I've also got guys or gals who are newer to the business, who are just going through the learning process. Well, you're not going to go it alone if you're a new trader and you're trying to learn this business if you come to us. We have a professional training program that you're going to get. It's basically a 1-month training program that consists of a series of lectures. It's going to give you a strong foundational approach for your trading. And then you're going to get access to, I run a daily morning meeting every day at 9 a.m. that I discussed a little bit. It's big picture strategy. We have a daily afternoon meeting every day at 10 after 4. I guess it's really Monday through Thursday. The afternoon meeting is an educational review of what the market did that day. And every afternoon meeting ends in a Q&A. I remember when I first got my virtual trading floor room going, the management at T3 Live, which is a separate affiliated company from T3 Trading Group, they were like, hey, Derrick, you should really do a Q&A once a week. People would really love if you did a Q&A once a week, maybe after your afternoon meeting. I said, once a week? I do a Q&A every day. If you've got pressing questions about your trading, about markets, or anything that can make you a better trader, I want those questions that day. That Q&A I think is tremendously important for all levels of traders in terms of taking things to the next level. So every afternoon meeting ends in a Q&A. You're going to get access to a lot of training and development if you're a newer trader and you're looking to get involved in the business with T3. And just real quick, experienced traders also. T3 is a very well capitalized company. I'm going to talk about capital contributions in a second and how the professional accounts work. But if you're an experienced trader and you want to contribute a couple $1 million into your account because you want access to $40 million or more, well, we can take care of that. It's not an issue. So that access to buying power capital is a huge reason. It's one of several reasons why you may want to get involved in this business. The capital access that you get, which here I'll just talk about it right now. So you have to commit a capital contribution to open up your account. It's going to go to back your trading risk. You're going to get access to buying power capital at 20 times your contribution for equity day trading and 8 times your contribution for overnight positions. So again, someone who comes in with $50,000, we're basically going to give you access to $1 million to start working with from the beginning of your career. You're going to get compensated through a profit split. Reach out to me and we can talk about what those numbers are more specifically. That degree of capital access opens you up to different strategies than you may not be able to do in a standard retail or standard margin account. I never have to worry about how much a stock costs. I wanted to buy 5,000 shares of Tesla, As long as I got that capital access, I just press the button and I buy. I'm not sitting there with a calculator saying, okay, well, Tesla is currently trading at, this price times 5,000 shares. It's going to be this amount of my dollars. No, I don't have to do that. What I have to be doing, the math I have to be constantly doing is the risk math. Well, if I buy 5,000 shares of Tesla right now and this stock goes against me, how much do I stand to lose? And that is why I tell my professional traders all the time, what I do as a professional trader is 85% risk management, 15% reward maximization. Risk management is the key to this business, and it is the number one reason why a person who pursues this business may not become successful. Is a failure to manage money and manage risk properly. And that is why I talk about it all the time. I end every morning meeting for my team the exact same way. Good luck, everyone. Trade smart, and above all, manage your risk. So, capital access is a huge reason to potentially join the company, but also is that direct market access, also is the free education, development, mentorship, coaching that you're going to receive as a trader. So reach out to me on any of that. Here's some of the stuff that you would get, right? You get access to my training program, which isn't even on this slide. You get access to my virtual trading floor room. My VTF room is awesome. It's very professional. Daily morning meeting, daily afternoon meeting. We're getting the news in there in real time. We're getting the large option order flow in there in real time. And guess what? You get access to a bunch of Scott Redler stuff as well. Scott's awesome, the Red Dog. I've learned so much from him over the course of my career. You get access to his VTF room, you get access to Redler, all access, all this stuff for free just because you have an account with us, either a retail or a professional account. So reach out to me. I don't know what you're waiting for. T3 is a great place to be. I've been here for over a decade. I've loved my experience. Here's my email address. So reach out to me. I'm going to get back to my trading because this market's been moving the entire time. I got positions on. So again, feel free to reach out to me if you want to chat about anything. Markets, skiing, martial arts, hiking, what it's like to run into a wild moose in the Teton Mountains. I can talk about all that. Here's my email address. All right, everybody. Have a great rest of your day. Good luck out there if you're trading. And let's see what happens with the fireworks.